Joining me is John Black, the CEO of Regulus Resources. Good to see you again, John.
Good to see you, Mark.
All right, so with this company that you're also the CEO of, you're developing the Antiquary project in Peru, and you're planning an updated resource estimate later on in the year. So an overview on Regulus.
Sure. The Antiquary project's a fascinating copper gold deposit in northern Peru, and we've just completed our phase 2 drill program just before the end of last year. When we completed our phase 1 program, we put out our initial resource, which consists of about 250 million tons of mineralization in an indicated category, about 0.48% copper grade, but notably with nearly a third of a gram of gold and very substantial silver associated with it as well. In addition to that, we have 267 million tons of inferred mineralization at a slightly lower grade than that. So over 500 million tons of quite attractive copper gold mineralization. It's in a geometry that's a remarkably low strip ratio with higher grade mineralization right on the surface. And even more importantly, it's only a portion of the deposit actually. We have a portion of the deposit, and the same deposit extends onto neighboring ground, where a joint venture between 3 companies is operating an oxide gold mine that is mining the cap off the top of this same copper gold sulfide deposit. So they have approximately twice as much tonnage of mineralization as we have in an inferred category on their side of the ground. A little bit lower grade, but when you combine the two, it's an extremely large deposit. And it's a brownfield setting, which offers the opportunity to be moving to production much more quickly.
This is where it gets interesting. So Antiquary, adjacent to this other project you're talking about, the Tantahuatay, and it's owned by a different company, but for fun, you call the two Tantaquary. So is it a no-brainer to put those two resources together? Are you actively pursuing that route?
It really makes sense on this. It's effectively the same deposit. It would be much more efficient to exploit the two of them together. And we think there's a logical win-win situation in that. Of course, it's not always that simple when neither of us really truly understands what we have. We're both drilling to expand our resource. But one of the factors that I take into consideration on this is that the oxide mine next door runs out of ore in about 5 years. And it's much easier to make a transition from an existing mine into a larger mine, a brownfields transition, than it is to allow a mine to be exhausted, to run out of ore, to close, and then start again. It's more traumatic for the local communities with employment changing dramatically. It's better for all stakeholders in the area if we cooperate to make a transition into a much larger, longer life mine in the future.
So the other project's owned by Comalache, and have you had active talks with them?
We've had a number of agreements with them. We've actually had agreements in place that allow us to collaboratively explore the project so that we can each use each other's infrastructure or data to constrain our own resources. So that relationship's gone very, very well as we move forward. We work with them on a regular basis to move forward. So communication is good.
You have some interesting shareholders at Regulus. Cisco Gold Royalties recently put in $5 million. You've got Rio's Newton division, and you're using their technology. We're going to talk about that. They put in $50 million. They got about a 16% stake. So this Newton technology, how is it superior? How is it a game changer?
We're about to find out as we move forward, but maybe if I step back just a moment on the nature of both of these investments. The last few years have been a little bit challenging for a lot of us in the resource sector to move forward. And funding has been a little hard to get, and it's often been very dilutive. If we do a traditional private placement, we have to price it under market and put a warrant to it, and it dilutes out our shareholder count for those that have been in the long term and are looking for the end game. So Adam Greening, who's our VP for Corporate Development, has come up with some very clever ideas on how we can obtain financing in a less dilutive way and in a way that supports our project. So we've done 2 agreements with the Cisco Gold Royalties, which have resulted in them paying us cash with no issuance of equity in exchange for royalties on portions of the projects that we believe are a much better value than if we'd issued shares. And then more recently, the Newton investment was an investment that was an over market with no warrant, and we received that strong endorsement from Rio Tinto, one of the largest miners in the area, a company that has a major project 50 kilometers to the north of us, that they believe that their new Newton technology would be applicable to, but they would love to test it on our project and evaluate whether they might want to acquire our project. For Rio Tinto, their objective would probably be the entire project, the entire district. But what Newton is it's the ability to do leaching of primary copper sulfides. In copper mineralization, we traditionally have two pathways you can process it. For oxides and secondary sulfides, you can do heap leaching, which is lower cost, more environmentally friendly. For primary sulfides, traditionally you've had to process them by concentration. You produce a copper concentrate, which means tailings that you have to dispose of. You have to find out how to transport your copper concentrate to a smelter. So it's an involved chain of movement of your products and quite costly. Rio Tinto, with their Newton technology, believe they have the ability now to do heap leaching of the primary sulfides as well. And they think it's particularly applicable to our project. It's important to note that we don't need to have this technology to move our project forward. We have alternate ways to process the mineralization, but they're strongly convinced that they can convince us that this will be the best way to move forward on a more profitable way to do it. So we're very anxious to start. We've just closed the agreement a couple days ago, and we'll be in the process of planning it over the next few months. And hopefully in another year, I'll be able to answer the question better about how well it works.
All right, very good. You gave us a good explanation there. Now, for those investors who don't know, just to remind everybody, you were part of a previous deal with most of your team, $650 million to First Quantum, and you're very upfront about saying we don't like to get to production. We're explorers and we develop it out. So, what is the plan here? You like to find an overlooked asset to add value, to monetize. So in your slide decks, in your investor presentations, it basically says, Aldebaran, watch here, watch this space. Same thing with Regulus. So what is the end game?
Well, we're quite open that that's our strategy. Is we use our experience and our knowledge of the South American Cordillera to identify projects that have potential to be large copper gold deposit, the type of a deposit that would be of interest to a major company. So it has to be big, and it has to be economically viable, and it has to be in a position that you can develop it moving forward. So we're not the only group that's done this. Ross Beatty's Lumina Copper Group's been a specialist at doing this. The Lundin family, Richard Warwick, others have done this. But collectively, those of us that operate in this business model have done a pretty good job of cleaning the cupboards. These are increasingly hard to find. We think we're on to two great ones with Antiquary, with Regulus, and our Altar project with Aldebaran. I'm not sure how many more of these we can find. But what our strategy is to identify these, show the full size, and then importantly, de-risk them by showing there are no impediments to being able to develop it. That makes it more attractive to a buyer. And then ideally we sell it by monetize it by selling it to the party that's likely to develop. But we're not miners, that's not our specialty. We could transform our company into a mining company, but that's a long, slow process. Many of our shareholders are my age and would prefer to see a return a little more quickly than waiting for us to build a mine.
All right, fair enough. Excellent stuff, very interesting. Thanks, John.
Great, thank you.
Okay, John Black, he's the CEO of Regulus Resources.